Hey guys, how's it going? Welcome to another live stream. I am a bit late today. Crazy day in the market today, right? We see a nice amount of red today. So I had to post a video beforehand, which kind of pushed everything a little bit further. But like always, guys, welcome to the live stream. We can take a look at any questions you guys want to do. Remember, I am not a professional or a financial advisor. I'm just giving my overall thoughts. So first, what can we see? Pretty much, everything is pretty red right now. Sorry, here we're getting hit with some ads. What do we have? Dow is down about 1.2%. Nasdaq is down 1.1%. The S&P 500 is down 1.2%. If we take a quick look at the maps, right, we have you barely have any greens. There are a few that are green out right now, but nothing to really catch my eyes. Microsoft down 1%. Apple down 1.6. Dr. Sim, good morning, Dr. Sim. How's it going? Nvidia is down 2.4%. AMD is down 1.1%. That's what yesterday I think it was down another 3%. So it's definitely even banks, right? We have JPM down almost 2%. We have financials, right? Visa 1.4. Even big boys, Google and Facebook are both down over 1.5. Good morning, Gordon. Good morning, Jesus. How's it going with you guys? Your boy, Why Red. A lot of news came out today, your boy. First, just a bit of fear, extra fear being added onto the COVID variants. And we saw Tokyo recently announced a state of emergency there. And just an increase in there, really fearing. That's the major news. I would say, your boy. I talked about it in the episode of my previous video a few minutes ago. But here you can see I don't think there's too much. So yeah, you can see the most of it is due to global economic reserves, and there was just the overall talks of new COVID variants right now. So that's the biggest. Do you think Tokyo Olympics will postpone? No, I don't. I don't know. I don't think so, Gordon. I think they're just gonna do what they did right now, which will ban spectators after they declare the state of emergency. I think that's how they're just going to do it, and just let players play on themselves. What should we expect from Neo Power Day tomorrow? So F, I don't follow Neo too much. I don't think it's gonna be. I do feel like a lot of these companies or a lot of these stocks, like investors get a bit too excited that they're gonna present something revolutionary, right? In Neo, and it's usually not just in Neo, in a lot of companies, right? Whenever a company has some form of presentation, a lot of people expect like some crazy revolutionary technology. Most of the time that doesn't happen, and you kind of get that overall hype before the stock, before the day, and then a nice dip. But unfortunately, I believe Dino has just been dipping nonstop with the overall concerns, right? So I know, yes, in the past 5 days, this stock is down about 17.08%, right? So yeah, it's definitely it's something like that. F is so short-term movements that it can go any other way. I don't follow the company to know what technologies they're going to talk about, but more times than less, it's just a lot of recap of what they're working on. So Gordon, yeah, that does hurt airlines, right? We have United Airlines right down 1.1%. We're seeing a better recovery. We see a better recovery over in the past few minutes, right? From opening UA, we have Delta, right? DAL stock. This one's down 1.01%, but again, you see that recovery over time. So what else did I miss? So Anson, you want to talk about Nvidia? And guys, while you're here, make sure to hit that thumbs up. It really does help with the overall channel. Nvidia. So right, this is a stock I've been talking. One of my favorite stocks, right? It is the biggest position in my portfolio. It something I've been saying, overextended, right? It's definitely overextended in form of technicals. Even though it's overextended at the moment, I don't trim. Maybe that's something I might work on in the future, but at the moment I don't trim positions even if they are overextended. What I normally do is I just buy other positions instead and let that become a smaller position over time. But maybe in the future I might start thinking about trimming. I'm still not 100% sure if I want to go that route. But Nvidia right down to is that $800 the split is expected to happen in the next few weeks. Fundamentally, I don't think there's any big changes with Nvidia. So I think maybe you guys just want to look at technicals. I do believe it's still a bit overextended. And here I'm taking a look. I tend to look at 3-day time frame instead. Very, very much overextended. I mean, so I would expect a pullback. I don't think that's going. I don't guarantee that, right? It's not a guarantee. I just believe the risk of a pullback happening is a bit higher. But I don't think there's any recent news. Is there, Anson, on Nvidia? Has there been anything recently in the past few days? I doubt it. Nvidia stock maybe. So if there's any Nvidia price targets are boosted, oh, that's actually pretty crazy. I mean, past few days. Let's see. Securities industry check shows continued rapid growth for the data center, and they raised their price target to $910 from a previous one. So that one, I mean, I'm bullish in Nvidia regardless of price targets. I really could care less what analysts say on Nvidia. I'm super bullish. This is a company I believe will reach a $1 trillion market cap within the next 5 to 7 years. So long-term investments, I believe, can still provide me over 100% returns. So what else do we have here? So we talked about Neo. That hurts. White Square drops a lot, Henry. I mean, Henry, I wouldn't say it's just the overall talks about this COVID Delta noise, right? I mean, Square deals a lot with actual business, right? Their point of sale system does well when the market is open. So I guess if people are worried that things are going to close back down, you would think Square, which deals a lot with the overall business and stores, would see a bit of a downtrend, right? 4.4%. If we take a look, right, at Square, I do believe it has been a bit overextended. Right now, I do believe a good portion of the risk, right, we can see it was a bit overextended here. I do believe a good portion of the risk for Square has been removed, but it does tend to sometimes move into this medium moving average. So it can continue to go down, right? But I like it where it's at right now. If I want to increase exposure, at the moment I don't, but if I want, I wouldn't mind buying a bit here. So Square definitely taking quite a hit. Overall, long term of things, I don't mind that, right? When we see red days, it's definitely pretty scary, right? We hate to see red days. It's the worst thing for our portfolio. My portfolio is down a few grand today alone, right? But as a long term investor, I had no intentions of moving my money out of my account today, next week, or next month, or even in the upcoming year. So for me, I don't care. I do put money into the market every single week though, so I'm happy to have lower prices to buy in. So that's definitely what I'm excited, right? Long-term investments, excited for the opportunity to buy at cheaper prices than we had yesterday. And this is actually one of the first, I feel like, past Thursdays, which is when I put money into the market. It's been green, so I just have this weekly ability of buying stocks. Unfortunately, it's been green the past few weeks. Finally, I get a nice red day. So red day during payday is definitely the best day, right? And that's definitely exciting for me. So I want to say that's main reason Square has dropped. Marty, you want to know if I buy China's big tech? I don't buy too much China big tech. I do invest in some, right? So Tencent is one of my favorite. But I think that's more because it is, even though they have a lot of digital ecosystem in China, they have a huge gaming portfolio. I really enjoy them for their gaming portfolio. So Tencent is one of them. I do have, what else do I have? I have JD, and then I have NIU, N-I-U. I don't have NIO. I personally don't invest. I'm not sure why. NIO never really catch my attention. But NIU, N-I-U, which is an electric scooter company in the EV market as well, that's one I enjoy. But a lot of these stocks, yeah. So David Becker, that's true. Daily fans are banned from the Olympics. I did see that right here. Olympics will ban spectators after Japan declares state of emergency. I mean, this sucks, right? I mean, I'm pretty. Obviously it sucks, but right, having countries try to really bid for the Olympics because they see huge growth in just the overall business around them in the local businesses, and now they're not gonna kind of get the that effect from for the Olympics. So, but yeah, Tokyo did declare that state of emergency recently. So what else do we have? So abs has fallen, right? That's one that's definitely taken a hit. I really do enjoy abs at these levels. Um, this is one of the ones I purchased recently. So abs is one I'm enjoying. It's down a nice amount, right? But I'm happy where it's at. I do believe a good portion of the risk has been eliminated. Obviously, the stock price can continue to go down, but they've done so many smart acquisitions in the past few months that it has become a whole different company from when I first looked at it. We can see it's up dramatically from when I first did my videos, right? I'm pretty sure some people got in. Oh, nice, Gordon. You will nibble on some shares of apps for sure, for sure. So right now, I mean, I'm pretty sure I did my first video on apps around here. I missed out on some of the game, a lot of the gains, right? But I'm still happy entering a position right now. I saw it at these levels and obviously hated it, but at some point, right, it's definitely a little bit too extended. I do believe right now a good portion of the risk has been eliminated, so I'm happy with apps. What else do we have, right? Let's take a quick look at the screeners. Let's see what are down the most right now. And if you guys want to take a look at any stocks, feel free. And is apps down more than 10%? I didn't really see. It's only down 3.6%, right? To apps. Down 3.6%. Digital Turbine. So I don't think it was down that big. I think in the past 5 days, right? It's right in 5 days you're down about 18.9%, and it's crazy how stuff like that, how just volatility gives you great buying opportunities, and that's why volatility as long-term investors is sometimes not a bad thing. I enjoy volatility. I enjoy seeing stock prices down a nice amount, especially like I said for long-term investments. If we take a look at screeners, what is down the most right now? So Newegg, right? This was a huge jump yesterday after some merger. I forget. I didn't really follow what's happening with Newegg. This was up big yesterday, over 100%, down 25%. You kind of scared me, Gordon, for a second, because when I purchased apps, I saw it was only down about 4%. So you mentioned 10. I was a little bit worried there. Not worried, but I'm like, oh man, I wish I would have waited a bit. We can see, right, Chinese stocks are still down. YMM down 10%. This is one that's getting the cybersecurity risk. We have Tao Education, another ADR, down 8.2%. Sentinel One, this is a recent IPO, I believe, in the cybersecurity. This is down 8%. I actually want to take a look at that one. I've heard someone, I forget who, in one of the comments mentioned this one. So it's down 5.6% from its recent IPO. It's still a bit higher. I wonder what the IPO price was. But this is an American cybersecurity startup based in California. So cybersecurity is definitely a market I want to increase my overall exposure in right now. My main plays are either CrowdStrike, I want to say is my main one, followed by Okta. Even though it's not in the full cybersecurity, it still does with authentication service, which is, I want to say, a form of it. So Gordon, yeah, was it you? Was it you that mentioned on Sentinel One? Gordon, I know I've seen it somewhere. Someone has mentioned it a few in some of my videos and comments. And now with this drop, I wouldn't mind taking a closer look into it, right? So Sentinel One has definitely, it's definitely one I want to see. But why is this? This is telling me one story. Hold on, let me see one day. So I'm guessing there's a bit of delay here in the stock screeners, because it tells me Sentinel One is down about 8% when it's really not. Yeah, Sentinel down 7.9. So I guess there's a bit of delay here that I have to work, get some. But what else do we have? See, Futu still a lot of Chinese stocks are down big right now, 7.1%. You have Tencent down. Sim, I'm pretty sure Sim is also one. Kingsoft, a software company. I know a lot of investors are pretty bullish in Kingsoft. This is one I wouldn't mind looking at another time. 6.6%. What else do we have? I want to see Coinbase. Coinbase is down almost 6% as well. Riot, I mean Bitcoin. I think Bitcoin is down, right? BTC prices have taken quite a hit right now. And if anybody wants to take a look at any stocks, feel free to let me know. But in the past 24 hours, Bitcoin is down about 5.5%. Sorry about that, guys. Too much talking today. So, I mean, is anybody purchasing anything today? What are you in your guys' watch list right now? In my overall market, there are some things that I might think about adding on or looking for upcoming week. I might even double down on my investments for this week. I put a little bit more than I normally do. And I think I might even do a little bit more. Visa is on sale. Gary, how's it going? Yeah, let's take a quick look at Visa. So Visa, I'm not in right now. Obviously, a great stock for sure. A lot of investors are happy. Corsair, now that one. Thank you for Gary reminding me of Corsair. Let me put a notepad here. Let me just add Corsair on that list. So Visa, right? I mean, for me, obviously, great company. FinTech is doing amazing right now. A bit overextended for my taste right now. That doesn't prevent me from buying. It just tells me, hey, there's a little more risk of a pull down happening. But Visa has been in a nice uptrend since COVID started, right? Since the overall correction started, ended. Just been a nice uptrend. Let me take a quick look at Y charts. Let's see what we can look about some fundamentals on Visa. So we have Visa here. Let's take a look at price to sales ratio. Let's also take a look at maybe EV to EBITDA forward. And let's take a look at panel per security, open images and new tabs. So we can see, right, Visa, and let me increase my time frame as well. So let's do from the beginning, and let's do July of 2019. Let's see what we can see here. So let's take a look at Visa, right? Right now, it's a bit, if we take a look at EV to EBITDA forward, it is almost at its peak compared to where it's been for the past since January of 2020. So something to keep in mind, if we take a look at price to sales ratio, and this one is going to be closer to a PE ratio. Now your price to sales ratio, it's I want to say on average of where it's been in the past. So I'm not, this is one that I'm not saying it's a bad investment, just one I wouldn't look at at the moment right now. Obviously, if I wanted to increase my exposure, if I wanted to increase exposure in Visa, right now would be times when I would buy at small percentage, right? Small percentage and dollar cost average over time. Now, Corsair, I do believe Corsair is probably looking a little more attractive, right? We had that crazy roundup, and Gary, appreciate the support. And remember, just because every investor has different investment styles, just because I might not agree with a certain stock or with a certain investment doesn't mean it's bad. It just means it's not for me. And every investor should understand that, right? Some stock, I'm more of a semiconductor guy. Many people might not enjoy semiconductor stocks, right? So every investor, you have to find what you really enjoy or what you can really have time and really read on financials and understand the overall business. So what's going on, Andre? Hey, so hopefully everybody's doing good. Remember, red days suck in the short term of things, but as long-term investors, we have to remember, right? This is if you are long-term investors, in theory, you shouldn't need to pull out this money today, tomorrow, or within the upcoming year, right? So long-term investors, volatility, right? This big red news sucks, but as long-term investors, we should welcome it as, hey, what is on sale today? So Frankie and Gordon, we'll take a look at GoodRx. That's the pharmaceutical style company, right? I do believe that's also taking quite a beating since its overall peak. We'll take a look at that one. Corsair is one. Why Corsair in the long term, though? So Corsair, it's definitely in a weird market, right? There's so much competitors with Corsair, right? There's Logitech, there's there's just a nice amount of competitors in Corsair. This is one where it's more of like a hardware company. I do enjoy Corsair because they own a good amount. I don't own Corsair in my portfolio, but I do enjoy the different companies that they own, right? They own Elgato. Me as a streaming guy, and I don't believe the streaming world is gonna end anytime soon, or the video content creator. Elgato is one of the best known names in the streaming world. If you want to buy like these streaming decks, like things to just like this. I'm using my stream deck right now to kind of transition over stuff, to finish records, to do streams. So Elgato is like the brand name to do that. They have a lot of lights. Their lights are a little bit expensive, but they're streamers out there who like to spend a lot of money. So Elgato has the streaming content, right? They also have Scuff Gaming, which is doing with the customization of controllers in the console gaming. They own so many different companies. Then Corsair for their main components. They also own Gamer Sensei, which is a way to kind of improve or esports mentor type deal. So I do like the products that they do. And if we take a look at fundamentals, let's kind of remove here. Let's take a look at Corsair. Maybe we can look at forward PE ratio, forward price to sales ratio, right? Forward price to sales ratio for Corsair. And let me do panel per financial metric. This is probably better. Sorry guys. So we can see, right, Corsair's price to sales ratio right now, cheapest it's ever been. In Corsair. If we take a look at Corsair's EV to EBITDA forward, again, almost the cheapest it's ever been. So if you're like a value investor that really wants to get into like the gaming, into the streaming market, I do believe Corsair could possibly be a great way to open with value in this, right? Not a crazy company either though, but we can see there loading up. So Corsair is one I don't have in my account right now, Gary, but one I wouldn't mind looking a little more into at these values. So what else do we have? So Gordon, you wanted to take a GoodRx, but let me take a quick look at some other questions real quick, Gordon, before we get there. So Frankie, what's up, Jose? I got Neo pre-market 43. It's looking good so far, and with Neo Power Day tomorrow, might just keep going up more. So yeah, Frankie, I mean, that's normally the case, right? When you have big news days, they tend to run up before then. Unfortunately, what ends up happening, and I see this a lot, doesn't mean it's a guarantee, but unfortunately, sometimes after the Power Day, investors don't really like the presentation or don't believe that they saw what they expected to. So you see quite a pullback after there. So normally that's one where it says buy the what is it? Buy the rumor, sell the news type deal. So normally that's what normally happens. It doesn't mean it's a guaranteed, especially since Neo, right? We saw in the past 5 days, it has seen quite a beatdown, over 18%, I think, in the past 5 days. So what else? Aaron, Corsair is being held back by its owner, EcoTree. They own over 55% of the company and have been dumping when the price gets to around 34. They bought the company for around $600 million. So each share is major profit to them at this stage. Oh, wow, Aaron, I did not know that. Thanks for sharing that. What is the market cap of Corsair right now? Let's take a quick look at that. So here we have Corsair stock. It's about 3 billion, so definitely great gains for them. And unfortunately, that sucks, right? That's insane that they own 55% of the business. Let me go look at Simply Wall Street, see if I can see them there. So Corsair here. Let's take a look at ownership. So EagleTree, that is insane, Aaron. 58.7% by just one cap by them. That was a great play for them. So yeah, it seems you've seen that they have been selling some of their positions over time. If we take a look at selling, EagleTree sold on June 21st. They also soon on June 14th. They sold also on June 2nd, and they sell a lot of shares, right? About 2 million here. They sold 5 million here. EagleTree on January 25. They also sold about 8 million shares. So each share is insane. And you can see they continue to sell. It seems to be every month or every 2 or 3 months that they've been selling them out. And sorry guys, I've been talking too much, so I have to stop for drinks from time to time. So Andre, Baba below 2018 levels. That is insane, right? So I mean, Baba has definitely taken quite a hit, especially it's been a target right after that Ant IPO. Then we had their CEO go missing for about a few months, and everybody was talking about it. So Baba has been definitely pretty interesting. I think rather than invest in BABA, sometimes I mentioned a few ETFs yesterday, Chinese ETFs that look pretty interesting as well. If one wants to get into the overall Chinese exposure, but don't want to limit themselves into the overall market. So into just an individual stock, right, Andre? What else do we have? James, what's going on, James? Do you think Japan Olympics will impact the overall stock market? So, James, I do believe that's one of the main reasons that stocks are down today, right, James? That news came out earlier I think it was late last evening or early this morning. I do believe that's one of the major reasons. The overall fear again of COVID variants has increased again and affecting stock prices right now. So it's already news, James. So I do believe whatever it has impacted, whatever effect, most of it, there's always some more effect it could, but most of the effect has probably already hit the market. Let me just take a quick look again at what's how the market is doing. Dow is 1.37. Nasdaq is down 1.4, and the S&P 500 is 1.3. We can see overall maps still pretty much red around everything. Let's see what other stocks you guys want to take a look at. So yeah, each share, Aaron. The big question: do they want to maintain ownership? Ownership and over 50% or just majority share ownership? I don't know myself. I wouldn't expect you to know, Aaron, right? And that's definitely a true question, right? What do they want to do, and how much do they want to sell out? And sometimes they just rather sell out because they see other investments elsewhere that might provide better returns, and they're trying to build up that cash position. So we have Angus, what's going on? So what do you think about Zora? It's undervalued with room for upside. So Zora, is that in the cannabis business? I'm not too familiar, or is this a software company? Let me try to find out real quick. Let's take a quick look at their fundamentals and see what I see. Zora is a software. So, okay, they are a software company, cloud-based software on a subscription basis that enables companies in various industries to launch, manage, and transform into a subscription business. All right, that overall market seems pretty interesting right now. We're seeing the whole world, right? Everybody is kind of moving into subscription business, from content creators to even writers to media companies, Netflix, right? The overall subscription business is becoming a new normal nowadays. So we can definitely see a growth. Market cap $2.1 billion. This company is expected to grow 16.8% on average for the next 3 to 5 years. So there is nice growth. And let me zoom in for you guys so you can see better. The company right now is not profitable, but they are positive in cash flow from operations, right, Angus? This is what you normally see in software companies, positive in cash flow. And so fundamentals look good. Strong growth, positive in cash flow. Now I want their financial balance sheet to be strong. And I do believe that's the case, right? They have $200 million in cash and almost no debt. I barely saw it, about $5 million in debt. So pretty much no debt. And they have about roughly 10% of their market cap in cash and short-term investments. Fundamentally, Angus, they look pretty strong. Again, I'm only looking at their fundamentals. You still have to take a look at what they do in forms of business, and do you agree with their market? Tian, my apologies for mispronouncing, is the CEO and is the third biggest shareholder with 6.3%. If we take a look at the overall stock price right now, I want to say it's not that overextended from its moving averages, but it definitely has seen better days. So right now we can see, right, it's a bit overextended, but not by much. Let's take a quick look at maybe some of their metrics. So this is ticker what was it? COU? I lost you here. Where are you, Angus? Okay, so I don't know. CUO. All right. I mean, I could have looked up here. I was already looking at it. Here, I'm pretty sure EV to EBITDA ratio is almost non-existent, but it actually is. So let's open up image in new tab. So if we take a look at price to sales ratio, I think this is probably the best thing when looking at software companies, right? The price to sales ratio. It's a bit higher compared to where it's been in 2020. But at the same time, its EV to EBITDA forward is a lot cheaper. So it's a little bit more expensive than where it's been in the past, but now it's making a lot more money than it was in the past as well. So I wouldn't say it's overvalued. At the same time, I wouldn't say it's undervalued. Their fundamentals look strong, right? They had that positive cash flow. They had strong future growth. They had strong balance sheet. Their technicals also don't look too bad. It's not as overextended, so I do believe a good portion of the risk has been eliminated. Obviously, the stock price can continue to go down. In fundamentals, you get a little bit of both, right? It seems one metric shows they're a bit overvalued, another metric shows that they're a bit undervalued. Again, this is why it's more important to look at how the company is going to go in the future, and that's understanding more about the company. But hopefully that helped out a bit, Angus. So definitely one to keep an eye out for sure, at least. So Aaron, what else do we have? And guys, feel free to post any questions. I'll take a look at any questions you guys want. But all I ask is make sure to hit the thumbs up. It really does help with the overall channel, and that's the best support I can do. You guys can do to help out this growth and allow me to do this every single day. So Aaron, profitable, founder-led. Check out Inmode too. Jose, lovely growth. Lovely growth. I like that. Unbelievable gross margins with a nice net revenue. All right, we can take a look at Inmode. I don't know what they do. Maybe, hopefully, so profitable, founder-led. And check out that insider ownership, 35%, which is hardly what you see in a multi-billion-dollar market cap. Trading 12 times forward sales, which is greater when you look at the above on my watch list. All right, Aaron, let's take a look at this one. So you want to look at Inmode. Gary, I do like AMD. I haven't really looked at the question. Let me look at Inmode and then I'll get back to you, Gary, for sure. So Inmode is in the healthcare industry. They design, develop, manufacture, and market minimally invasive aesthetic medical products based on its proprietary radio frequency assisted. All right, so it's in the overall health market. One market I'm usually not too big in, just because it's not one I understand. But we can already see what they do. If we take a look at future growth, they're expected to grow 17.8% on average for the next 3 to 5 years. So strong growth in it, right, Aaron? For sure. They are profitable and they are positive in cash flow from operations. This is very, very bullish. Cash flow from operations in the past 12 months has been $97 million. If we take a look, they have a $3.5 billion market cap. Not too bad, right? For sure. Another thing, if we take a look at their margins, they have on $231 million of revenue, they did almost $100 million in cash flow from operations. That is actually pretty darn impressive. Let me take a quick look at Lazy FA. Sorry guys, let me just log in here real quick. Hopefully you guys can't see what I'm doing. All right, so let me take a look at this one. This was what ticker again? It was ticker INMD. I just want to see those margins. If those margins are really so this is a foreign ticker, so I might not get too much information, but their operating cash flow margins for 2020 were 38%. That is pretty impressive, Aaron. So I have to agree, their margins are great, especially their cash flow margins, and that's what I really like to see. So what else do we see here? If we take a look at their financial health, they're debt free and they have about $300 million in cash and short-term investments, looking pretty good. And like you mentioned, their ownership institutions own 54%, individual insiders own 24%. Right now, Moshe is the CEO and chairman, and he owns 12%. Then you have Michael. He is a director, and he also owns 10%. So these two people own a good portion of the business, almost a quarter, a little bit more than a fifth. So this is pretty strong fundamentally for sure, Aaron. I'm really liking it. It's in the market I'm not too excited about, but sometimes, hey, maybe it might be smart to just kind of venture out. If we take a look at their technicals, they are, I want to say, a bit overextended for my taste. Skin in the game on this one, I would start off with something very small, just because it is a bit overextended, right? We see it pull back, and this is what you normally see with overextensions. You see it pull back a bit. It kind of pulled down and then shot back up. Definitely one I want to add into my watch list though. So let me just change this to my orange. This is usually my watch list, and let me add Inmode here. Maybe if we see some bigger drops, I might think about it. But now let's take a quick look at valuation metrics. This is ticker INMD. Let's look at what their valuations are looking like. And let's try to do as far as we can. So open image in new tab. Inmode, price to sales ratio, right? It does seem in form of valuations, in form of EV to EBITDA and price to sales ratio. it is pretty strong, right? It's pretty a lot higher. It shows it's overvalued compared to where it's been in the past. That's all these metrics tell you. It doesn't mean it's undervalued compared to where it's going. It just tells you, it just gives you historical sense. But it's definitely one for sure in my watch list. Fundamentals look pretty strong. And again, just because it's overvalued right now, it doesn't mean it can't keep going up, right? I just believe the chances of it going back down are a lot higher. And that's what I like to do, right? I like to think of my risk, a little bit of my risk and my percentage of a stock going down. And what's going on, Julie? How's it going? Stocks for sure. And appreciate the support with the member there, Julie. Appreciate it so much. It really does help out with the overall channel when you subscribe as a member. And guys, make sure to hit that thumbs up. It really does help us a lot. So hit that thumbs up on it. So any stocks you guys want to take a look at right now? If not, I just want to keep looking at the market. Right now down 1.3%, still down. After that drop, it hasn't really moved too much. It's kind of just sitting there, 1.3%. Nasdaq 1.46, S&P 1.3%. Unknown name. Oh, Gordon, I forgot, my bad, on your GoodRx, and unknown name on Uber. For sure, let's take a look at those two stocks. Let me just take another quick drink. I'm doing good. Portfolio looking red. Agreed, Julie. That's the mentality, right? That's the mentality long-term investors should look, right? It sucks seeing the portfolio red. It definitely sucks, right? I'm not gonna lie. I'm down about what 6-7 grand from my highs that I've seen in my portfolio right now. It sucks to be red, but as long-term investor, I don't mind it. It doesn't scare me at all. The only thing it scares is I wish I had more money available to invest right now, right? That's the only thing. But let's see. So let's take a look at Uber. First, let's start off with Uber let's start off with technicals with Uber. Let's mix it up. So Uber technicals right now, definitely not overextended. I do believe a good portion, right? When it's not overextended, only thing is I believe a good portion of the risk has been eliminated. With Uber, that's the case. The only thing I would say is be careful. There's not much volume within these areas right here. So mid 40s is probably one of like the best supports right now. 48 where it's at right now. So something to keep in mind of. But I do believe a good portion of the risk has been eliminated. Obviously, stock price can continue to go down. If we take a look at Uber in form of where it's at right now, 91. Holy smokes, it's that big. I did not know it was that big of a market cap. So market cap is $91 billion. Future growth, right? The company right now is not profitable. They're not positive in cash flow from operations either. So a company like this, you would want them to have a very strong balance sheet. Obviously, COVID has taken a huge impact on them. I do believe Uber, before COVID, they were expected to become cash flow from operations positive pretty within a few quarters before COVID, but then COVID really has impacted them. That completely changes the company. Right now, market cap of 20, they're expected to grow 24.1 billion, 24.1% on average for the next 3 to 5 years. So strong growth. Let's take a quick look at their health. Unfortunately, I want to say their health is a bit, I'm not too happy, right? $7.8 billion in debt, $5.7 billion in cash and short-term investments. I do believe I have a small position in Uber, very small. I haven't added in a long time, and right now I have no intentions of adding on it. Again, I don't mind having a small position in it. It's a very small play, but one I don't intend of adding. If we take a look, let's take a look at fundamentals. I mean, valuation metrics. Let's see what we have here. So Uber, let's remove Inmode. Let's open image in new tab so we all can see. So Uber's price to sales ratio since January, I mean, it's been on average where it's at right now. If we take a look at its EV to EBITDA, it's on the negative now. It's always been a negative, so that's probably not a big metric. Try to block that off. I think price to sales ratio for Uber is the best one since it's still a growing company and in early stages and not profitable. But we can see in forms of valuation, it's on average where it's been pretty much since January of 2020. So I don't want to say it's undervalued. It seems like it's properly valued at the moment. Again, I don't like where it's at right now though in forms of balance sheet. Balance sheet is probably what biggest red for me, especially since the company is not profitable or positive in cash flow from operations. Whew. Man, we're going through a lot of stocks today, guys. You guys are really looking at some stocks. And Julie, let me take a look at GoodRx first. So GoodRx Holdings, this is definitely one that was very popular when it first IPO'd, right? This is a recent IPO and is down a nice amount. It's probably down almost 50% from its all-time highs. So it's crazy. Whew. So unknown name, no problem. Remember, these are just quick analysis. If there's ever a red flag, it's just, hey, we need to do more information reading. And then at the same time, I didn't really look at the actual company insight. So I just look at the fundamentals. Maybe you have better insight of where the company is going in the future, but that's a portion that I miss because if not, we will be doing analysis over multiple hours for one stock, and we can't really do that here. I'm pretty sure we could, but I really don't want my brain will just diminish in no time. So these are quick analysis just to show some of my red flags, some of my green flags, and then it's better to go on and do some more research after that, right? And again, none of these are advice, but GoodRx, right? Definitely taking quite a hit from its IPO prices. This is the one I believe in the. Let's just take a quick look at their website. I forgot the prescription prices. All right, yeah. So you can kind of get into their subscription service. Stop paying. They have like I know they have a subscriber membership where you get like better discounts, or you can just download their apps and kind of get free coupons to show your pharmacist. So let's take a quick look at the overall stock. Not overextended. I believe a good portion of the risk has been eliminated, right? Again, that doesn't mean the stock price can't go down, but I do believe a good portion has been eliminated. If we take a look at their overall fundamentals, let's see what's happening. I'm pretty sure $12.7 billion. So not super small, but not a big company either. If we take a look at future growth, they are not. This is pretty weird. So right now they're not GAAP profitable, but they are positive in cash flow from operations. That's okay. All right. That's why, Julie, appreciate the support. It really does mean a lot. Thank you so much. It means so much. So cash flow here, what do we have? Cash flow from operations is very positive for this company, and this is what you like to see. Unfortunately, guys, sometimes when looking at GAAP earnings, there's one-time expenses that really kind of, or one-time gains that can really kind of fluctuate the earnings. And that's why I personally don't look at GAAP earnings. I like to look at cash flow from operations. I believe that tells me a better insight of how the company is doing. And that's why I don't know if you guys have watched some of my videos. I say, hey, I'm not a fan of earnings. And this is the reason. I'm pretty sure there's gonna, oh, wow, we're sorry. You ran into a bug. Did they just ban my account? They're like, man, you're showing too much information here. We got to ban you. Looking at too many stocks. I have unlimited stocks. But we can see, right, cash flow from operations is positive and it's nice steady. So I like their fundamentals. They're expected to grow 27.8% on average for the next 3 to 5 years. So strong growth as well. I do want them to have a strong balance sheet. They have about $1 billion in cash and about $700 million in debt. So remember, they are positive in cash flow from operations. So fundamentally strong growth, positive in cash flow, and a decent balance sheet. Obviously, if they had no debt, that would be amazing. But their balance sheet is still pretty strong. Whew. What else do we see? So venture capitals and private equity firms, they own about 66% of the business. Institutions only own 11.8%. Private companies own 14%. So this is something for sure. Let me give that Discord channel. Let's see. Let's just go to my channel real quick. I always forget to do this. I gotta put this. Come on, YouTube. Jose Najarro. Let's take a quick look. I gotta put this on for stocks. Oh, come on, stop. All right, there you go. So I should pin this. Let's see, Discord group. This is this Discord group, guys, and it's free to anybody that wants to join. Let me pin the message so you guys can see that. But yeah, let's take a quick look. GoodRx. So fundamentals look pretty strong. Now let's take a quick look at valuation metrics here. I forgot. Was it Gordon that wanted to look at this one? GRX. And I forgot. Let's just find it. GoodRx. So let's open image in new tab. Let's see what metrics are telling us about GoodRx. So price to sales ratio, we see, right? This stock price has definitely corrected. So it's cheaper than it's been most of its life. If we take a look, EV to EBITDA, again, cheaper than where it's been most of its life. So historically, it just shows it's undervalued compared to where it's been. Again, it doesn't really show you how it is compared to the market. But I do believe a good portion of the risk has been eliminated. And if I wanted to really get into the market right now, I would say it wouldn't be a bad time for me to enter. I personally am not, just because I'm just not interested in this stock at the moment. Appreciate Jose. Love how you dissect the stock. I appreciate. Thanks, Gordon. It really does mean a lot. And remember, after this, some great things to do, Gordon, is go to investors presentation. Right, they usually, if you go to their website, they should have dude, they don't have it here. Normally a company would have it. Cookies, nope. Investors. So here you would go to the investors. I would take a look at recent news, right? What's happening? How is this company changing in the past few months? I would take a look at their recent earnings presentation, investors presentations, and then I would also just try to read some articles about them and really understand what's some bearish cases on this stock and what's also some bullish cases on the stock as well. So yep, let's see what else. So I might have missed some questions. Let's take a quick look. Whew. So Julie, yeah, Disney, I definitely talked about it recently. I know yesterday I did the episode. I think someone mentioned that. David, thank you for doing that. I really do like Disney. I do believe a good portion of the risk has been eliminated. It's already a big portion of my portfolio. So for those reasons, I'm not planning on adding. But Disney is one of those stocks I don't mind holding forever. I just love the strong IP that they do. But I definitely do, Julie, mention a little bit more about them. More in depth in yesterday's video. So Nick Lee, I know you are a big fan. I'm pretty sure you mean fan, but I don't mind being a big fan either of semiconductor sector. What's your top pick amongst NSFPS, CDNS, or ATOM? So unfortunately, Nick, right, in the semiconductor, I haven't really looked at those three. Maybe I should add them to my watch list and maybe do a comparison of those three stocks. So let me just add them here, giving me ideas for future videos. ATOM. But let me just see what they do. Let me just understand the markets they're hitting. So NSPS, Synopsys, is American electronic design automation company that focuses on silicon design and verification, silicon intellectual property, and software security quality. All right, it sounds interesting. Let me see. What else did you have here? You have CDNS. CDNS is an American multinational computer software company. They don't explain much here. Okay. So, Nick, these are ones I'll probably do a video on later on, just because I am kind of getting that brain fog now. But let's take a look. What's going on Premier League? How's it going? I hope everything's going good. Let's see. And Julie, do you hold any bank stocks? I was looking to get into a couple because of how noisy the dividends are. What are some really high dividend stocks you recommend? So Julie, I don't really enter the bank market. I think the closest thing to fintechs are my Square position and Square position. What else do I have in the fintech market? I have Square, PayPal, and I have one more. I have Square, PayPal, and Stone. I don't think they pay crazy dividends. Before me personally, I just not big into the banks. If I really wanted to increase maybe a little bit more and more traditional, I would probably do stocks like Visa or MasterCard, right? So those are probably the ones I would do before kind of entering the overall dividend play. But I know a lot of people are a fan of like Bank of America. I know Bank does a nice dividend of 1.84. At the same time, just not my investment style. It doesn't mean banks are bad. I'm not saying that. It's not a portfolio I would like to have my money in, right? Julie, and in form of dividend plays, I don't have too much dividend plays. I'm looking for future dividend growth though, and might be a little bit weird. For dividend plays, I'm really looking into the gaming market, and this is weird, right? So you have Activision. Activision pays a very small dividend of 0.5%, but I believe Activision and like the gaming market as a whole is growing dramatically. The amount of cash flow that they're having, if they're not gonna be buying studios, I'm pretty sure we're gonna see an increase in dividend yields. So I do believe gaming companies in the future will be great dividend plays. So this is what I consider dividend growth. So like Activision and EA, where right now they pay small dividends, right? Less than 1%. I do believe in the future, within the growth we're seeing in the gaming market, the margins they're getting from online, from the actual in-game products, right, which have almost 100% margins on those, I do believe it's gonna consider them. It's gonna become a good play for dividend players in the future. I would say in about 5 to 10 years, people are gonna be talking about EA Games, Activisions, and other gaming companies as strong dividend plays. Just because the way the market and the cash flow is going. So Nick, I appreciate it. I will look forward to seeing it. I'm sure that you like all of them. Thanks, Nick, and appreciate giving me ideas, right? This is why I do enjoy the overall these streams. I get so much information from you guys. And guys, make sure to hit the thumbs up. Could you share Premiere? Sure, we can take a look at Discovery A. I know there has been some recent news, and give me 1 second for another drink. Das, which stock do you recommend based on current situation? So obviously no recommendations here, Das. I personally like Huya a lot better. That's the one that holds a big portion in my portfolio. Huya is the one I enjoy because I liked Huya before the merger. Even before the merger of Doji, I liked Huya. I like Huya the most. So I don't have Doji in my portfolio, so that pretty much tells me which one I like. At the moment, Huya is a nice 2 to 3% in my portfolio. I don't want to increase that position size anymore. But that might change, right? It's definitely looking pretty attractive. I think I unfortunately hit red on Huya. Huya was a good price for me in the low teens. I think I'm finally on the red for the first time on Huya. But I still like it. So Jui, you want to diversify your portfolio with dividends, so even when the market is down, I'm still making money. That's a pretty good mentality, right? Everybody has their own thought process. I enjoy still when market is down, since I'm not dividends for me. Like, let's say I went into dividend plays, I wouldn't take out that money, right? Dividends, I would just reinvest it. So it's still money I wouldn't expect to see in the future. So for me, I personally enjoy growth stocks or just overall innovative markets. But I can see why someone would like dividend plays. There's multiple investors that enjoy different investment styles. You just have to find the one that works best for you. Ronald, you bought SOX. SOX, that's the overall ETF, right, for semiconductors. Nice. So you want to get the overall, just a little bit of everything with SOX. So best of luck with you, Ronald, on that market. What else do we have? Julie, you really like EA. They are coming out with a massive hit, Battlefield 6. Yeah, we saw, I mean, their overall trailer was amazing. I mean, one game can definitely make a difference, but for big companies like EA and Activision, it's just the constant release of multiple games. So Jose, what's the best high risk, high reward stock you own? I'm looking at WTER, but the balance sheet is in shambles. Thoughts on it? My best high risk to high reward stock. That is pretty interesting for sure. I want to say one that I like right now that probably has the biggest risk in my portfolio, but I believe can do great returns, is a small market cap. It's still very small position, and that would probably be OSS. One Stop Systems, super small micro cap company. Normally micro cap companies is a lot of volatility. So this is the one for me. I don't ever want to make it 1% of my portfolio, because even small positions can become big winners. So the OSS is one of them, right? Not recommendation, just the one I like. It's in the semiconductor industry. I thought I've done a few videos on them, so definitely just go Jose Najarro OSS. That's the one I enjoy the most. Biggest risk, but I do believe big reward in the future. Other plays might be, what else do I have here that I would consider high risk? Some people might consider Skills. Skills is another one that I own there. But yeah, I think OSS would probably be. And the perfect example, I mentioned Celsius. Celsius was one I bought small position. It was probably 1% of my portfolio when I bought it. maybe even less than that, even less than 1% of my portfolio when I bought it, and I bought it in the low teens. Now it's one of my top 5 winners. It's done amazing returns. Even a small position can really affect your stock portfolio if they are a 10 bagger or so. And Celsius has been like a 6-7 bagger, and the amount of gains I've gotten through Celsius has been amazing. So this one, Celsius, really opened up my eyes that, hey, Jose, even a small position can really impact a portfolio in the long term of things. And that's something that you don't hear a lot, right? People always tell you, hey, you should only have X amount of positions. I believe any size position portfolio can do amazing and can provide great returns. So what else, guys? And make sure to hit that thumbs up. It really does help with the overall channel. And 43 viewers I'm seeing right now. Thank you guys so much. It helps so... It's insane, right? When I get this kind of support from you guys, it really, I just don't know. It gets me so pumped. And thank you so much, guys, for just coming here, interacting with me. That helps out so much. It really brings, it's just this inside feeling. It makes me all tingly inside. So, all right, let's see. And you wanted to talk about one. Which one was it? I forgot, Monk. WTER. WTER. Let's take a look at that one. So, it's a water company. Not too familiar with it. I mean, we can see in the past years, it's definitely had. I'm stunned. Happy to be here. Stunned. Appreciate the support. So we can. I want to say in technicals from right now, definitely a downtrend. Right. Not a fan of it, especially for multiple years. But right now, what I can see is not from its moving average. It's not overextended. So I believe a good portion of the risk has been eliminated. But you can see, right, even when it's not overextended, it can continue to drop. So right now, and not a fan of it. Let's take a quick look at fundamentals. What do we have here? Let's see. WTER. Is this it, right? Alkane Water. So market cap 112 million. Super small. Future growth, this company is expected to grow 25.9% on average for the next 3 to 5 years. They are not profitable and they're not positive in cash flow from operations. So right now, this right off the bat will be a speculative play. Speculative plays aren't bad. It just tells me that, hey, Jose, there's probably a little bit more risk inside of it. So make sure if you have a position, let it be a small position. If we take a look, you would want this to have a strong financial health. Right now, $9.1 million in cash, $4.7 million in debt. They're almost a 2-to-1 cash to debt. Not bad. I wish they had no debt, though. I wish their balance sheet was a little bit stronger and they had a little bit more cash. I would want something more like 10% of their cash being their market cap, since they're not profitable and positive in earnings. Right now, it's more like 4% if you look at the net debt, right? If you subtract cash to debt, they have about 4.4 million in cash. So that's about 4% of their current market cap. I wish it was a lot higher, around 10% for a company that's not profitable or positive in cash flow from operations at the moment. So this would be a very speculative play. I'm not a huge fan of their balance sheet. I don't think we're going to get too much information here on it. I forget who even asked about this. Monk, right? I don't even see it in the, oops, that's in financial metrics. WTER. I don't think we're gonna get information here, but let's see what we can get. All right, open image and new tabs. Let's close this out. Price to sales ratio. It's I want to say a bit higher compared to where it's been, and also its EV to EBITDA is negative, so ignore that one. Price to sales ratio a bit overvalued compared to where it's been in the past. Not one I'm enjoying. Again, it doesn't mean it's a bad investment. It's just one that has too much risk for my taste. So hope that helped out a bit. And what else, guys? Let's see, what else do we have? So Priya, thanks for the thumbs up. Priyankar, thanks for the thumbs up. Presley Hernandez, what's going on? Jose, thoughts on Tencent currently? Great gaming company, but the tightening Chinese regulations sound concerning. For sure, right? Tencent is one that I added on to my weekly buys. I still enjoy Tencent, but again, there is that concerns with the Chinese market. I did talk about just the overall Chinese stocks in general yesterday, where I mentioned that, hey, it definitely check out that video. Let's see where it's at. YouTube, let's go to Jose Najarro. Priya, this is, if we go to videos, I do too many videos, right? I mean, Chinese stocks right here. So let me share that. with you. I would definitely recommend. It gives you a little bit more of my thoughts. Man, 4 people hate me talking about Chinese stocks. 4 thumbs down on that one. But definitely check that video out. It gives you my overall thoughts. Tencent is one I enjoy. I do believe with the overall kind of timing of tech stocks, Tencent is one that's gonna get hit a little bit harder. But I do like where the stock price is at right now. So like I mentioned, I did increase exposure on it. It's definitely taking quite a hit. But let's see. All Chinese stocks are cheap. Dojo, Baba, etc. 52-week low. What are your thoughts? Oh, so pretty much same. Again, check out that video. At the same time, right, there is risk with having Chinese or international companies. Right now, it's definitely higher with China because we're seeing that overall regulations from the government. So it's a lot higher than the rest of other international companies. For that reason, I personally like to limit exposure. I don't think all my Chinese stocks make up more than 15% of my portfolio, if that. They might make up about 10%, right? I have Huya, which is about probably 2%, Tencent, which is about probably 3%, Neo, which is about 2%, and I think that's all, and JD, which is probably about 2%. So about 10% of my portfolio is in Chinese stocks. I enjoy them, but again, I understand there is risk, so I limit that exposure. I think that's what every investor should kind of do is, hey, maybe try to limit my exposure. And that's not only for international companies. Sometimes there might be players who just have 80% in EV markets. I don't believe that's a bad play, but remember, there is just added risk of having that exposure in one market. So just remember, hey, sometimes maybe just limiting exposure to certain stocks or certain markets is a great move. It's not a move for everybody, but it's definitely a move people can make. So let's see, what else do we have? So Gordon, hit that like button. Cool, love this channel. With so many growth stocks, my investing style is to collect growth stocks and hold long terms. Gordon, best of luck. I mean, let's just all try to make money here. So David Becker, how about Tencent? That's high. That's, what do you mean high? I don't mean that. I don't understand. High, but I do like it, right? We just talked about it. I know that was probably earlier. Right now, I do believe a good portion of the risk has been eliminated. It's about to sit next to its 200 moving average, and that's me sitting on the 3-day time frame. I do believe a good amount of support is at those levels. So for me, I like to look at the 3-day time frame. I believe it removes a lot of the noise, and it shows me where some really strong support is. For Tencent, I believe around the low 60s is going to be looking pretty. David Becker, for high risk, high reward stock. Oh, for sure, Tencent there. So let's see. Biz, what's going on? Biz, do you think the sell-off will continue tomorrow? I don't know. In all honesty, I hope it does. I don't mind having more sell-off to put more money into the market. As a long-term investments, that's what I would hope for. I would hope for it to be every Thursday when I put money into the market, right? But at the moment, I don't know, right? There's so much news, right? The news that came out with China, with Tokyo kind of doing the state of emergency over there, which out of the blue, right? Kind of out of the blue. So the volatility is due to unpredictable news. So obviously we can get some more news tomorrow that can affect the overall stock price and the overall stock market. And MITQ, Dr. Sim, I'm not familiar with that one. So guys, I bought apps the other day thinking I was going to be getting a good deal. Now I'm not sure where that's going. So Biz, that's one I actually just purchased. I just recently purchased as well. I'm happy. I'm happy with my purchase, but I did get on it today. This is one that has become a huge different player. Right, you can see, right, when I'm happy at the levels it's at right now. I do believe a good portion of the risk, even if you might have gotten like what 10% higher than where the stock price is at right now, I do believe in long term of things, again, not advice, on long term of things, it will provide better returns. So sometimes it sucks. We buy stocks and then they're down 5-10% even after we purchase, and it makes us seem like bad investors. But unfortunately, the volatility comes with the game. It's how we handle that situation after we see those drops, after we purchase, right? So I do believe getting rid of emotions is a good portion. And I mean, when I say get rid of emotions, it doesn't mean don't be happy, don't be sad, right? Like I hate seeing my portfolio red. I hate it. So I have that emotion of hate or red, but I don't act on it. And I think that's probably a better saying. Don't act on emotions, not don't have emotions when investing, right? Just don't act on them. Yeah, so Biz, I like the fundamentals. Like I mentioned, I purchased it. I purchased that one today. So guys, this is it for today's episode. It actually went a lot longer than expected. I really do appreciate the support, guys. Make sure to hit the thumbs up. Make sure to, if you want to support the channel, go to another video and just hit the thumbs up. Just hit the comments. Let me just give you guys this one. So I did post a video earlier today. If you guys can just go and, oops, that's me right now. Stocks down. If you guys can just go to this channel and just post a comment, it really does help so much with the overall channel. It would really mean a lot. Can you help look into OLED? Dr. Sim, it's already 11:30. I want to go get some breakfast. I'm kind of starving right now since I woke up. I've been working on videos. So tomorrow's stream, if you're here, Dr. Sim, I'll gladly take a look at it. OLED, you come in and I promise, Dr. Sim, you say OLED, I'll remember and we'll take a look at that one first. So guys, take care. Have a good day. See you next time. Make sure to show support to the channel. And thank you guys for stopping by.